Good morning, everyone. Mike and Corey here today. You can see I have some green on. That's because the markets are in green. So I like to see that. And I know all of you do as well. We have three exciting topics. One is an update on the magic number that people feel they need to reach to retire comfortably. Then the second is some more good news, which is Trump meeting with some key leaders regarding tariffs. And then Corey's going to take it into some analysis on how, when earnings calls come out, how they are mentioning tariffs. And so, with that, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So with that, I'll just start off. Actually, like when the markets are up, it's always nice to show that. So let me just bring that up real quick. And of course, we have no idea if they will continue. But after being down yesterday, it was down. Dow was down 1,000 points, a little bit more than that. Here's today. It bounced right back, up 800 points, and more importantly to me, the S&P up 2.19% and the NASDAQ up 2.48%. So that is good news. So how does this news affect you? And psychologically, there is the magic number. The magic number to retire. Part of me says the magic number to retire is like 67 or 70, or it's an age number, but it's really not. It is how much money do you have in your account that you feel that you can retire in combination with likely you'll receive Social Security or some kind of a pension if you are involved in that. But how do you make that determination? If you have $0, you can't say I retire and I don't have anything to pay my bills. So this is kind of surprising. Corey, I think this is going to surprise you. The magic number fell. It fell to 1.26 million. So last year, and I don't remember exactly.
Are they talking about the magic number or the magic account balance? Because the magic account balance might have fallen.
Yeah, well, yeah, it's definitely fallen. Maybe that's what it is. People are getting more realistic on that. But last year it went up to 1.46 million, and this year it dropped by $200,000. So everyone says my account can have $200,000 less, and I still feel comfortable with that. I will say that this is just an average number. I mean, for some people, 600,000, if you live frugally and you have your house paid off and you have Social Security, 600,000 might be fine. 400,000. I mean, but then other people, if you plan on going on a lot of vacations and you still have a mortgage, that number might be, 2.5 million. I don't know, but that's a question, a discussion to have with your financial advisor to figure out, using our Money Guide Pro planning software, to figure out really what the appropriate number is. Obviously, you want to feel comfortable with it, but just because you see a big number doesn't mean that it's right or wrong. So it did mention that it said market volatility, inflation, and future uncertainty have all helped undermine retirement confidence, which is kind of surprising that the number would go down. If anything, to me, the number would go up, certainly if inflation is involved in that. So I just thought that was an interesting article to look at. Here's some other information out here. The average 401k balance was we'll just round it, 132,000, and the average IRA balance is 127,000. So $1.26 million is a long way from those averages. But keep in mind, a 401k or an IRA, they can be in different accounts. You can have multiple 401ks. And it would be a suggestion that if possible to roll that together and let someone, a financial advisor, preferably at Ankerstar Wealth, help you with that. Anyways, Corey, what do you think? 1.26 million. What do you think about that? Sound realistic?
I'm doing financial plans all the time, meeting with the family this week. The conversation around a nest egg like that is, can you avoid any lump sum type of expenses in retirement? And that's obviously different for every family, but you want to have that stuff built in, and you can build that into financial plans. Obviously, we do. But you know, every family is going to end up being a little different. I certainly have have worked with families in that range where all the math checks out and it accounts for inflation and all that. So yeah, is it reasonable? Yeah.
Okay, awesome. Yeah, I mean, and I can only imagine, 20 years from now what that number might grow to. I have to believe it's going to go up, but
That's the problem, the inflation,
yep. Yeah, I mean, technically, if the inflation went up by 2%, that retirement confidence number would have to go up by 2%, theoretically, if you understand the math, but we'll see. Okay, so some other interesting news. I see this as very good news. Trump hosts Walmart, Target, and Home Depot CEOs. Why is this good news? That means Trump is listening to key business leaders who absolutely have their finger on the pulse of America. Walmart, Target, and Home Depot. If the U.S. economy is doing well, these companies are going to do well. If the economy starts to slow, these are some of the first companies that are going to experience that and see that. So it's good that he's listening to an outside source, so you don't just get in an echo chamber of your own advisors. Certainly these companies are going to come in and say, hey, all this tariff uncertainty, this has not been good for us. I imagine that's what they're saying. I don't know for sure, but I just have to believe it is. So anyways, just I see it as positive. I'm not saying that's why the market jumped up today, but as Trump expands that view, I mean, certainly I believe that he appreciates leadership from CEOs and will listen to them. They're not big tech firms. None of those are big tech firms. Of course, I'd love to see Starbucks in there too, because that's another one that has their finger on the pulse. So anyways, good news there. With that, Corey, take us now. I'm sure they spoke about tariffs, but what are you hearing on the earnings calls regarding tariffs?
Yeah, Mike, this has been what I've been really looking forward to. So you can see how it's pretty nerdy, almost embarrassing. I've been really looking forward to reading through conference call transcripts, but hey, it's the truth. I am who I am. So I got some companies here. Now, of course, everyone's excited for Tesla after the bell today. We will see. Tesla has so many different dynamics going on, and even some political implications with people in other countries and whether or not they're excited to buy Teslas right now and all that stuff. But here's what we have from this morning. So Raytheon, an aerospace defense company. Of course, there's more than that. It's a big company. But what do they have to say about tariffs? So traditionally, they said that tariffs, the entire aerospace complex was tariff-free globally. So tariffs are new. So here we go. They have this is really interesting quote. As a result of all the uncertainty and the history of tariffs in their industry, they say, down in that second paragraph, we have not included the potential tariff impacts in our outlook for the year at this time. So they just say, no tariffs. That said, we believe it is prudent and helpful to at least share some estimates of the direct impact of the current tariffs on our outlook. But again, in their guidance, they built in no tariffs. All right, let's go to Kimberly-Clark. So you've got consumer defensive company, home goods, all that stuff, diapers, wipes, They say, so bottom of the first paragraph there, the majority of what we sell in the U.S. is sourced and made locally here in the U.S., and that in terms of raw materials and finished goods, our combined exposure to 3 specific countries, China, Mexico, Canada, was just less or around 10% of our total cost of goods. If we factor in all of our raw materials on the second paragraph now, and finished goods imports for our U.S. business, 80% of our total costs in the U.S. are U.S. based. So only 20% of our U.S. costs are exposed to tariffs. This is very interesting detail, for a big company like Kimberly-Clark. As Mike indicated, Mike, was that you? As Mike indicated, in the last 20 days, we've had to reflect cost impacts of actions on 3 fronts, which also include the depth of actions. First is the aggregate U.S. tariffs on China of 145%. They're estimating costs of somewhere just under 300 million. So that would be painful, to them. They didn't share if they're passing that on to consumers or if they're absorbing it, but they give us a number. That's nice. Moody's. Okay, Moody's, they've got their finger on the pulse of all things markets and public companies. So they say tariffs have been impacting how companies are thinking about spending on spending and investment decisions. It's created some uncertainty. We've seen some of that already in April in terms of just a delay in issuance. Spreads, so spreads on different rates so you've got like your junk rates and your high quality rates. They've seen that lower quality debt has required a slightly higher premium than it had been. That's called your credit spread. But spreads have widened out a bit. We've had some risk off days. Last year was blue skies the entire year. We're in a much more of a headline driven environment, and we've had some no issuance days. So they are seeing kind of a slowdown. Try to go a little quicker here. I'll just give you a synopsis, a couple more. GE Aerospace, similar to a RTX, a Raytheon, except they are baking in a number of $500 million. $500 million. And then Verizon said, I'll spare you, I won't read it. They said, yeah, all of our headsets and things, those will be hit, and we're just past. It said ultimately that's going to hit the consumer. So they're going full pass on. So anyway, Mike, any of that interesting to you?
It's a very interesting mix. I thought I might see more people kind of throwing in the kitchen sink, like tariffs are going to cause us to spend a lot. It sounds kind of mixed. Some of the companies are very U.S. sourced, so obviously there's less impact to it.
Mike,
Yep, go ahead.
I skipped part of the GE Aerospace to save time, but they actually maintained their guidance. They said, yes, our costs are going up by the 500 million, but we were also outperforming our other estimates, and so it's all going to even out. So that I thought was really interesting. They reaffirmed even though their costs are higher.
So I think what'll be really interesting is over the next few weeks, as some of the big tech companies come out with earnings, throw in Eli Lilly and a Berkshire Hathaway to see what they say, because those 7 plus 2 plus, I'm sure there's Broadcom or somebody like that, those 10 companies have such a heavy weight on the market cap of the S&P 500, probably about 40%. So it'll be interesting to hear what they say on impact. So anyways, today we'll enjoy the green. Hopefully I'll wear the green shirt again. Probably not. But we'll see some more green numbers today. And I know that tomorrow I'm sure we'll be talking about Tesla. And I think we have Bitcoin on the in the parking lot for tomorrow. So with that, thanks everybody. Have a good one. Bye.